All right. So one of the things if you've traded for a while, one of the things you come to identify is that it's sometimes difficult to track everything going on in the markets properly. It's difficult to track everything that is going on properly. So to make life easier for you and for us as traders, we have what we call expert advisors. So which is simply a way of automating the trading process. Now, there are different types of expert advisors. You have expert advisors who just basically analyze the market and then give you information of or something has happened. Say, for instance, if you are trading HPLR and you want to look at daily highs and lows, previous days highs and lows, and you just want something to look at the trend and inform you when previous days highs and lows have been taken in a particular direction, then of course you could do that. You could also want something that will take the trades for you. Then you also have trade managers. So trade managers basically help you to get in and out of trade, and then they manage the trade to completion. So for instance, moving your trade to break even once maybe a particular number of hours has been reached, or maybe a particular level on the chart has been reached, and then you want it to break even. So sometimes you might just be at work, or you might just get carried away one or two things, and then you are not there to either break even or to take your profits or to trade your stop, and then just come back to the chart and then price has just reversed back against you. And you just get so frustrated and all that. So these are all the so many things that we could do with EAs. And personally, I say I've gotten to that point where I find it a bit troubling to trade manually. Even though one of the methods that I have to use to trade still has to be manual, but at least you would create things to make life easier for yourself, even if it's just to simply alert you when yesterday's lows have been taken. So sometime this year, I think after so many people have reached out to me, okay, how do we do this? Can you do something around HPLR? So I decided to create a tool that would be as comprehensive as possible. The tool that will be as comprehensive as possible when it comes to subject of HPLR. So I would start by explaining the HPLR EA today. I will explain what the HPLR, the various components of HPLR, and that will also help us to understand the various ways we can trade HPLR as a strategy. We've explained all those things before, but it's always good to run through them again. So the first thing in HPLR is basically high probability, low risk trades. That's what we are looking at, high probability, low risk trades. So in getting high probability, low risk trades, we are looking at places where the market is likely going to reverse from and begin to move up in the original trend direction. Now, we looked at either areas of consolidation. And if you understand market structure, you know that in areas of consolidation, where we have consolidation in the market, we have liquidity being generated. So you have a situation where, say, for your Asian period, where the market is ranging. So you have a lot of buyers coming in, sellers coming in, but no clear direction. It generates a lot of liquidity in that space that eventually, once market takes to a particular size, it's likely going to be hitting a lot of stop losses, going to be triggering a lot of trades. And the reason why this is important is the market makers need liquidity. So let's say you're in the market and you want to buy, let's say, a pair of shoes. To buy a pair of shoes, you need someone to be selling you a pair of shoes. So you won't be able to buy a pair of shoes if there is no one selling a pair of shoes. So similarly for the market makers, for them to buy, they need someone to be selling. So what they do is to engineer liquidity. That is what we call it, to engineer liquidity. So they try to set up certain people or to trick certain people into taking the opposite of what they actually want to do. So let's say, for instance, the trend right now, so we can use using a value line. There are several ways to track it using COT, using moving averages, using bearish and all bearish order blocks, bullish order blocks, supply and demand. There are several ways people try to track what smart money is doing per time. Now, for us, we just basically use our value line to make it simple. So if we look at the daily chart, this is the daily chart of GBP USD. We can see that price has been bearish since, it's turned bullish, but price was bearish for a very, very long time. I think since, it should be since March or so. Okay, since February, yeah, towards March. So GBP USD was basically bearish, but price will not move down like this. Why? At some point, you will no longer have sellers, or you no longer have buyers rather. So if the market makers are selling, they need someone to be buying. So if the market makers are selling, they need someone to be buying. I would explain that further now. So that we'll quickly look at something. Now, this is GBP USD. GBP USD has started turning bullish, or has broken out bullish. But let's look at what retail people are doing. So if we go to my FX book sentiment, we can see that 65% of retail traders are actually bearish. 65% of retail traders are bearish. So usually when smart money is buying.
Sorry, we don't see your screen.
Oh, sorry. Can you imagine? And no one said anything so far.
Yeah, people are in the chat, but
okay, in the chat. Oh, I wasn't looking at the chat. Oh my God. Oh, just have to start everything I was saying from the beginning. Wow.
Yeah, okay. For recording. Yeah, sorry.
All right, thanks. So, sorry for that. I forgot to share my screen. So what I was basically explaining was what I call the counterparty principle, which is that when you get to the marketplace, you will always have buyers and sellers. For a transaction to take place, you need to have buyers, you need to have sellers. For every transaction to take place, you need to have a buyer, you need to have a seller. A seller he can't sell to himself, all right? A buyer will not buy from himself. If not, he's no longer buying. So you need to have sellers, you need to have buyers when you come to the marketplace. So in this marketplace, usually smart money because they want to go a particular direction, they need some other people to go the opposite direction from where they are going. So say they want to sell, like GBP USD has been in a sell. I mentioned we have different ways of tracking this. For us, we just use a simple value line to make our life easy. So since March, GBP USD has been bearish. But I said price will not be bearish, or price will not just go down in a straight line, even though these people are selling. Even though smart money is selling, it won't just go down in a straight line. You will have it coming in waves. Why? Because at some point, we are going to run out of buyers. So we start selling. For this thing to continue going down, some people are actually buying. Believe it or not, some people are buying. Some people are buying. So they just continue selling to these people who are willing to buy. And then eventually they're going to take profits at some point. So you get to a point where you don't have much buyers again in the market. And around that point, because they see, in case you don't know, brokers have a way of knowing where volumes are in the market. You might not know the precise point, but we have ideas of where they are. So once you get to that point where you start running out of, and you see it's represented in candle patterns. So things like this, where you start having indecision points, those are probable regions where there's a possibility that we are running out of willing buyers, counterparties to take the buying side of this sell that is taking place. So the market maker will always try to engineer retail traders to take the opposite side. And so we are taught, all the rules of, for instance, if you are using RSI, oversold, overbought, and all that, all those things, you just find a way to get people to go the opposite side. So I was trying to show us something on IFX book. So right here, price has turned bullish. But if you go to my FX book and look at retail sentiment, GBP USD, 65% of retail traders are actually bearish. 65% are bearish. So what will happen? The market maker will find a way to keep pushing this thing up and keep pushing it up and keep pushing it up until most retail traders have been flushed out. And once the retail trader starts taking, positions in the other direction, that is when they start taking profits. So for them to take profit from these, their long positions, again, they must do what? They will start selling. So eventually retail traders will say, oh, this is an uptrend. But always most times they are very late. So this is an uptrend, then they start looking, eventually they start changing their position from short to longs. That's from selling to buying. At that point, when they start buying, the market maker basically starts taking profits on the longs that he had already started establishing from here. So our challenge as retail traders is to identify when the market maker is trading and to try as much as possible to trade along with him. Now, and that's basically what we look at when we look at high probability, low risk. We are looking at trades that are in line with the market maker's direction, that we feel are in line with the market maker's direction, and we are looking for it at points where we expect the market to make a U-turn from. Now, we have different ways that we can look at that, and I'll point out a few that you can immediately see on your screen. So one of such things are fractal points. Fractal points. So you can have, so if we see GBP/USD, we are basically bearish. Let's go to the 4-hour charts. We are on daily. So if we go to the 4-hour charts and just look at something like the month of September, I don't want us to go too far. Just look at something close by. So this is September. Let me close this for now so the screen can be wider. So this is a fractal point. For those of us who understand fractals, price just comes in, takes that fractal and drops from there. This is another fractal point. Price trades above that fractal, drops from there. And that fractal point trades above it, a bit of a drop. Creates fractal, trades above that fractal, drops. Now we're not looking at this today of hours. Remember, we're looking at the daily. All right. So that's one of the ways that you can trade. You wait for fractal points to be created, wait for price to trade above those fractals and drops from there. Wait for fractal points to be created, wait for price to trade above those fractals, drop from there. So, and you can just continue that. So of course, sometimes you will have losses and we'll take our losses gladly. But you do this a lot of times, and more times than not, you find out that you are in the right direction. Another way that we could frame this is simply to look at previous days' highs and lows. Previous days' highs and lows. So let's say we know that we are supposed to be bearish. So wait for price to take a previous day's high, drop, high, drop. So for some of us, you might even want to, you can create more rules and say, oh, I only want it to happen when it is the weekly high. Let's go back to 4 hours again. Let's start from October. All right, so all throughout October, we are bearish. So previous days highs and lows. GBP USD. Sorry, let me add one more indicator to make our life easy. All right. Where's that? So I'm looking for the high load. Just make it so I can see it. Let's make it easy for us to see the current weekly highs and lows. So let's increase the thickness of this so that we can see clearly. All right, so this will help us to see the current, to see if price is currently at the high of the week or not. So let's start from the 4th of October. So 3rd of October, price comes in here, close of Asia, takes Asia high. It takes yesterday's high, yes. Small drop that I've gotten an entry or not, hit your SL. Then eventually we get this move here. And from there we are dropping. They come back here again, probably tap that level. And then we drop. Remember, we are bearish from the daily. So let's quickly look at what happened last week and then the moves that we could anticipate for this week. So if we go to the daily, we'll start an analysis from DXY. So DXY is currently bearish. DXY turned bearish on if you are trading the way we like to trade, one of the things you should learn to do, especially when trading the USD pairs, which are basically the favorite pairs to trade, always make sure you are looking at what DXY is doing as well. So DXY turned bearish on the 26th of October. On the 26th of October. All right. So from then on USD pairs, we are basically looking for bearishness. We are basically looking for bullishness on XXX USD and looking for bearishness on USD XXX. So let's look at AUD USD. AUD USD was one that was, if you don't look at DXY, would have been tricky to trade because AUD was still bearish even after USD had turned bullish. So, but for those of us who are smart enough, once DXY has turned bullish or bearish, it has a way of pulling all USD pairs with it. But let's just focus on just using our value line for now. I just forget that. So would have been looking for bearishness as of the 8th. So let's go to AU. So on the 8th, we would have started the week on the 7th. So on the 7th, would have been looking for previous day's highs to be taken. Took previous day's highs, closed below this bullish candle. You would have taken your trade and straight to played around, looked like almost in your favor, and then straight to SL. So on this other day, we didn't get a trade. It was outside the time we were really looking at. So might not have been in this trade. So collapse down. Now for this week, AU is bullish. AU is bullish. So we'll be looking for, from a weekly perspective, we'll be waiting for price to come back down. So price has pushed up and continued pushing up from yesterday. So we're waiting for price to come down. And then probably tomorrow, doesn't look like we're going to get that weekly trade on AU this week, today. So we'll see what happens between today and tomorrow. But that price will come down. I think they give us a weekly low tomorrow for us to take it up. Similar things are playing out on almost all the USD pairs. So EU2 is bullish, and it should have been a good buying opportunity. That good buying opportunity. Now I'll be waiting for price to still come down on EU. All right, so waiting for price to come down on EU and also move up. Same thing on UCAD. On USD card, we had a wonderful trade on. We had a good trade on the 10th. We had a good trade on the 10th. So where's my fibs? So we had this price took yesterday's highs, and at this point it was a high of the week. This is the high of this week. So as of this point, it was still the high of the week. Would have drawn our fibs like this. So price came in, played with your emotions, and then dropped hard. This would have been your trade for the week, and you are done. We had another trade on AU, but AU, I think we were on the Zoom on Thursday when that trade happened, and he didn't come back to pick us. So unfortunately, price never came back to pick us up right here and just left. But you would have caught down one on UCAD. On NU, again, didn't come back to pick us and traveled. So basically this week we'll be waiting for price to come back down. So since we don't have any setups really brewing like that, I'll just walk us through. For those of us, some people have messaged me concerning the EA. I'll just run through it and what we have there, and then the explanations of what those things mean. So you have a couple of things that you could use. So you could choose to trade Asia. Now, if you are trading Asia, one of the things you would quickly come to identify, personally, I don't trade it. And that is because I basically, for a very long time, I trade weekly. I go for weekly trades. I am more comfortable having a few trades and that are more accurate. If you trade Asia, you have a lot more trades. You will hit more stop loss, you will hit more TP. So you likely have more money at the end of the day, but I don't enjoy the roller coaster that the account goes through during the week. So I prefer to just relax and take that. So what you can decide to trade Asia, if you're interested in trading Asia, all you just have to do is to change this from false to true. So you need to choose one way to trade. you need to tell the EA what particular way you want to trade. You can choose to use previous days high and low. And your previous days high and low, you might choose that you don't even want it to be strictly the high of the week. So for that, you can just set, you can say use previous days. We'll run one on UCAD so that we'll just see how I would have taken the trade. So you can choose to use this. True. Now maintain previous week's swing. Okay, let me quickly explain that. So now let's go to H4. Now, usually, if you understand what we usually say about um, price structure, when we are in an uptrend, we usually expect price to be creating higher highs, higher lows, higher highs, higher lows. When we are in a downtrend, we expect price to be creating lower highs and lower lows. All right, so let's say we are in an uptrend. This is what we expect. We expect the lows of this week to be higher than the lows of this week, and we expect the highs of this week to be higher than the highs of this week. So if for any reason price now goes lower than the lows of this week, it is possible that price structure might be changing from an uptrend to a downtrend. So you could decide that once the lows of the previous week gets violated, you don't want to trade anymore. So now, please, everything that we are saying, don't just say, oh, okay, this is what they said we should do. Go and backtest these things for yourself and find out what you are most comfortable with trading. So if you are trading that, you would have probably gotten a buy. If you are using 4 hours, for instance, you would have gotten a buy here. So that is basically what maintaining previous week's swing is. So you can choose to set this to true or false. If you set it to false, it basically means don't worry about that. As long as the trend is the trend, then just trade. And of course, you could choose whether to even use a bias or not. You could say, I don't even want to use a bias. I just want to take the HPLR in any direction that it presents. Not advised, but of course, there is a particular strategy I'm trading now that for now, this is the only way I've been able to program an EA to give me alerts. So when it gives me, I have to go and watch some other things manually to take the trade. So you might have another strategy that you just want it to tell you when previous week's highs, in fact, you just want it to tell you when there's a HPLR in any direction. Basically, when previous days lows or highs have been taken, you don't care about your bias, then you can just leave this thing like this. So use bias set it to false. And so once previous days highs or low have been taken, you will get an initial alert. So let me just run this on, say, let's run this on AU. UCAD. I'm not sure it's whether UCAD was, I think UCAD was still bearish as of last week on the daily. Where that smart money divergence thing comes in, but let's not go into that right now. Okay, so it's already bearish. And I started this from October. I started it from November. Okay, so, oh, sorry. I've not selected the right things here. Okay, I'll just use it to explain. So I selected, I was backtesting something before this meeting started. So I said use previous week's highs low. Use previous week's highs and lows only. So you can choose that the only thing you want to trade is if price takes previous week's highs and lows. For any reason, that could be what you want to trade down. Surprisingly, stay profitable. Surprisingly, you would have been profitable in that period. So using trading with no bias and just using previous week's highs and lows. So, and then making it strictly weekly. So that's still be profitable in that period. But let's look for what we want to see. So let's say we want to use our value line. You will choose whether you want to use what time frame you want to use for your value line. What time frame you want to use for your value line. So let's say you want to use the daily or the 4 hours. You can just come here and select which of it you want to use for your own value line. So of course, if you're on the 4 hours, you get changes very quickly. So once the bias has started changing, the bias will change faster. But if you're on the daily, it gives you the opportunity of also avoiding fake outs. So sometimes it looks like the bias is changing and then it just switches back again, maybe a day or two later. So on the daily, you get to avoid some of those whipsaws that we usually see in bias. So again, it's for you to do a bit of back test and determine what best for you or what you are most comfortable with. So let's assume you want to trade previous days highs and lows. Want to maintain previous week's swings. For now, let's leave that as false. Strictly weekly, yes. These fractal levels for now, let's leave that as no. Do we want to use previous week's highs and lows? Yes. Now you can here specify the risk per position. So do you want to risk 0.5% or you want to risk 1% or you want to risk 3%? Now I've created EAs in time past and people come to me and say, oh, okay, this EA, when I did it for the whole year, it gave me 10% or it gave me 15% or it gave me 20% or all those things. And people are looking for EAs that would do like the ones you see on MQL that does 1000%, does 100%, and all those things. Now, just realize that it's all about your risk per trade. So if you go to a lot of those EAs that you see, you get to see things like 45% drawdown, 60% drawdown. So it's for you to determine what drawdown levels you are comfortable with and setting your risk per position to also meet that. So if you are comfortable having things like 45% drawdown, then why not? You can have 200% profits. So you can increase your risk to say 3% and all those things. But if you want to be careful about trading for maybe say prop accounts and all those things, you probably want to reduce your risk to something like 2.5%. Then you can set the minimum RRR you should have. So this allows you to filter out when you have SLs that are too large. So basically how it works is this, we have what is called the profit ATR time frame. So we take the average true range. So that's the expected range. So let's say we want to trade USD CAD, for instance, and USD CAD moves about 160 pips in a week. It moves about 160 pips in a week. So what this does is that it would look at, it determines what time frame is going to use the ATR. So should you use the daily ATR, the figures for the daily ATR, or should you use the figures for the weekly ATR? In other words, what range are you expecting price to expand to? So if you're expecting the price to expand, say 70 pips, maybe which is one range on UCAD, 1 day's range on UCAD, you can choose, okay, that what I want to be using is 1 day and all that. And what it will do is that when you calculate your stop loss, it's going to divide the ATR number by that stop loss. So let's say you have your stop loss is 70 pips, and then it checks what is the average pips that this thing moves on the daily. If you select daily, and it checks it and it is 70 pips, By the time it divides it, the RRR it will come up with is 1. So if you have set your minimum RRR here to 3, it won't take that trade. It just means that your stop loss is too large. So it is not a trade that you can take. So all those things have been factored in into creating the EA. Now, let's say we are looking at 1 week. So we are looking at our weekly trades, and we say we want to use the weekly trades and say USD card has an average movement in a week of about, let's say, 180 pips. And then we get there and we have our stop loss is about, say, 30 pips. So when you divide the expected average weekly movement, which is 180 pips, by that 30 pips, which is the SL, we will be getting 6. So your 6 is more than the minimum RRR. So the EA will go ahead and place the trade. So this allows you to filter out setups where the range of the candle is so large that it will take you forever to hit your TP. So that's just basically what this is supposed to do. And then of course you can set your TP2 percentage. So it's basically the hours that you want. So 100 means 1 hour, 200 means 2 hours, 300 means 3 hours, and on and on. Then you can set the break-even RRR per day. So let's say break-even RRR per day, break-even RRR. So that is basically when the EA will move your stop loss to break-even. So you can set this to 1, and it just means once 1 hour is achieved, it should break even. You can set it to 2. Once 2 hours is achieved, move it to break even. 3. Once 3 hours is achieved, move to break even, and on like that. How many trials should it take? So if you set 2, it means once it tries it twice in a day and hit SL, then just stop. So this is important depending on what time frame you are trading. Then of course you can determine what days of the week you want to trade. I personally, as a person, I don't trade on Mondays. So for me, this Monday will be set to false. I don't trade on Mondays. So you can decide what days of the week you want to trade. So those who are thoroughbred ICT traders might decide that they only want to trade Tuesday to Thursdays. So you can set Monday to false and Friday to false and leave it out like that. Then you can have months of the year. There are months of the year where you might just discover you don't want to trade for one reason or the other, maybe due to low volatility, or you discover that generally from your journaling, the strategy doesn't work so well during those months. You can just set those months to false. So you don't, the EA is designed to be a bit of all-encompassing in what it can do and all that. So let's run it on UCAD and see what we have gotten October to now. So this is I think I said everything properly. Bias use bias true. Higher time frame 1 day. I want to use previous days high and lows. Want it to be strictly weekly. Though use previous weeks high and lows. All right, and then we can run this. So when you have this running, one of the things that it does is that it even alerts you. So the first thing, it will send you something called potential. So once it's discovering that, oh, there's a potential trade on the horizon, it's going to alert you that, oh, okay, there's a potential trade on the horizon, get ready. And then eventually it gives you the setup, takes the setup for you, whether it hits TP or hits SL. It's basically what it is. You take what it provides and go. So this was that last trade on the 10th. So we had, if you remember, we go to UCAD. This was what happened on UCAD on the 10th. So once a high of the week is created, remember that we said we want it to be strictly weekly. So this is on the on the 8th. That is when we had the first. On the 8th, remember we said use previous week's lows as well. So he sent us on the 8th, the week's lows, which was this, had been taken. But we didn't get any setup there. Then on the 10th, 9:30, so at the close of this candle, it sends us an alert that a weekly high has been created. So that there's a potential sell setup on USD CAD. And then it continues doing that until then we get this closing below, and it sends us an alert that we have a bearish setup on USD CAD and our entry level where your stop loss is supposed to be, and then the potential RRR on this trade. So the potential RRR on this trade is 5.5. So basically what we are saying is from this point, from this high of the week, we think, at least we assume at this point, that this is the high of the week. From here, if we remove 1 week's average range from here, and remove 1 week's average range, that we could target 5.5 RRR and be safe. So so it opens a sell limit, and then shortly after that trade is activated, then price goes above this high that was created here. So it sends you a new alert as is a potential sell again on USD CAD. Eventually we get this close here. So it sends you another trade, and that trade alerts that you have another bearish setup on USD CAD, because remember, you have not completed the number of setups told it to look for in a day. So if we told it to look for only 1 trade in a day, once you got this one and sent it, that would have been all for the day. So if you have that, be careful how you set that. So, and then it opens order 11, price never comes back to this level again and just goes on. But we're already in the trade, this particular trade 10, which eventually hits our take profit level. So for this one, I just set this thing at 1 hour. At 1 hour, and 1 hour got us 232. 1 hour got us 232. That's about 2.3% with a win rate of about 77%, which is good in my opinion. Don't expect that to always be the case though. I expect that to always be the case. You have times when you might even have negative periods. So that's basically the way that works. And you can come here and look at the way the graph works, look at the reports, anything you want to see in the reports. You can play around with it, look at the hours, 1 hour, 2 hour, 3 hour, 4 hour, look at what gives you the best results, and then know what to use for that particular pair. So tomorrow, Bishop will be introducing a breakout strategy to us. Before that, I said I was going to give out something this meeting. So if you have a strategy, and that strategy has a good win rate, good returns, and you have written rules, it's not, the rules are not in your head. You have written rules about how you trade that particular strategy. You can send it to me, get it across to me on Telegram, message me, let me know these are the rules of this particular strategy, and I'll try and code it. I'll try and program it into an EA. So I'm going to leave it open for the first 5 people to message me. So the first 5 people to message me have a strategy, this strategy is good, or this strategy is profitable, good win rates, good RRR, good returns over the last couple of months. These are the rules, and I will try to code it. I'll try to create an EA around it and see whether something that is actually as you claim. So that will be all for today. Tomorrow we'll start looking at our breakout strategies. For those strategies as well, you discover I've also made EAs that can also work around those strategies, those breakout strategies as well. And then we are looking at creating indicators that will also help us. So that the whole idea is to reduce the time spent on the charts, reduce the time spent watching charts, and just automate most of the things that we need to be doing. All right, so if we have any questions, I'll just take those questions now and we can wrap it up for the day. Tomorrow, hopefully, we should see what is going on. For those of you who might be interested, okay, let me not complicate things. One thing, we're trading HPLR, let's stay on HPLR. So for now, we'll be waiting for USD to come back down and then give us the low of the week for us to take it up. So that's basically what we'll be waiting for, what we're expecting from USD for now. So any questions? Any questions? Bishop, any words?
No words. I think we've had more than enough for today.
I have a question, Paul.
Those who are interested in learning how to code EA, I held a class December, January of this year. I'll hold another EA class, and this time around we'll make it EA and indicators, and probably January, February. Let's see. I'll announce it. Yeah, someone said he had a question.
Yeah, Paul. I just wanted to ask, when will we know what it will take to get this like?
Hopefully before the week runs out.
So that we can prepare not just for the monetary aspect, but every other thing that might come around with it.
Hopefully before the week runs out.
Right.
And Bishop will discuss with the team, and we'll conclude on that. Day 3 recording has not been posted. Okay, noted.
Okay. Day 3 has been posted now. Day 3 has been posted.
Okay. So
if you have not seen it, it means you are not subscribed to the YouTube. So I decided to stop dropping it in our Telegram because the video is there on YouTube. We don't subscribe. We don't even like or make comments. So if you are subscribed, you get alerted that a new video has been dropped.
Okay. All right. And also, before I forget, the first stream program should be kicking off. Is it hard learning how to code EA? It depends on you. Everything depends on everybody. But the first stream program will be kicking off this Saturday. Should be kicking off on Saturday. I will encourage those who are yet to attend. There are a couple of things that we are working on that will be of immense benefit. To everyone who is a trader. And of course, we have some of those who have even gone through the first stream program in time past who are having issues that their psychology is out of whack and all that. And one of the good things about the first stream program is that once you are in, you get access to any new thing we are developing and all that. So, and of course, when we have things like this HPRE and all that, it's going to be subsidized for those who have gone through the fostering program before, as opposed to those who are foreigners to us, who are just our observers from outside. So the recently passed out fostering guys are still just embarked on their second what's it called, their 30 days challenge, because after the first one, after the fostering program ended, had to hold sessions with them to look at things and all that, and then start a new one, hoping that they've addressed their personal demons, and so see how that goes. So want to join, we're looking at various strategies, risk management, and trading psychology. So those are the three things that we'll look at as always. So strategies, risk management, trading psychology, and get your trading off to a good start. All right, so I think we can call it a wrap. Recording.